Okay, good morning, everybody. Thank you so much for joining us this morning for our latest CPD Live with Stephen Parry on expenses and MTD. Stephen is our amazing accountant at TTA, so he is very experienced and works very closely with tutors and tuition businesses. And I think we're all very much looking forward to what Stephen has to share today. Thank you, Stephen.
Thanks, Tom. Morning, everybody. It's good to meet. Just a quick bit of background. So the plan for today is an overview of making tax digital for income tax and how that applies to sole traders and specifically to tutors. That'll probably take about 10 minutes, and then I was going to have a walk through the rules around deductible expenses, what's allowable and what isn't, and how those work, and then probably take about 10-15 minutes, and then plenty of time for questions at the end. But do feel free to fire any questions to Sam, or in the meantime we'll try and pick them up. Just have a quick show of hands. Can I just check if anybody here is currently registered for making tax digital for income tax? Anybody? No. Okay.
One hand up.
I'll just give you a quick little bit of background to the politics around this then. So this legislation's been knocking around for about 10 years. So the government introduced the intention long term. The government's always intended to try to get to real-time reporting for all taxes, and doesn't have the technology or bandwidth, and HMRC certainly doesn't have the resources to do it. So they've been doing it piecemeal, and about 7 or 8 years ago, the government introduced making tax digital for VAT with quarterly reporting, and that became compulsory. Big shake-up for everybody, including the accountancy profession. And the main change then was that you could no longer submit VAT returns yourself. You had to use compatible software. And that change is also applying now to income tax, but only to 2 categories of people. And I sat through a talk from HMRC on this a few weeks ago, and they reckon the current wave, which will come onto the thresholds, is going to capture about 3 million people, of which they know around 2 million of those are already submitting tax returns, and of those about 1 million have registered. So they're reasonably happy with the take-up so far, but there's about 1 million people that they know should register, should be submitting tax returns, and haven't. And this is one of the ways they're going to try and capture those people. So it's part of the government's ongoing attempt to close the enormous tax gap that we have, which is running at about £47 billion, which is people just not declaring or paying tax, trying to close the gap. And then there is at the moment no plans to extend making tax digital to corporation tax. So if you're trading through a limited company, you don't need to worry about that at the moment. So I will press on, but it's taken a long time. For those of us in the profession, we've been waiting for this for years, and it's been start, stop, and they've run lots of pilots, and it's finally arrived, and we just have to get on with it, unfortunately now. So could I just check, Sam, can everybody see that my slides have moved on? Is that okay? Okay. Yeah. So I'll spend it. So the new regime, to all intents and purposes, is an attempt to try and replace the current regime of submitting an annual self-assessment tax return. Not quite in practice. It's actually more admin, not less, but it does attempt to replace the current regime. I'll talk about the thresholds and rollout timeline and the deadlines, and then towards the end we'll run through what makes a wholly and exclusively deductible expense for tax purposes and some of the issues around that. So that's the general plan, but if anybody's got other questions, do let me know. So the current process, which you're probably familiar with, is one annual return. The deadline for filing is the 31st of January. The tax year in this country runs from the 6th of April to the 5th of April. So your annual return for the tax year that finished a couple of days ago is currently due with HMRC by the 31st of January. What the system is moving to is 4 quarterly updates with a declaration at the end. So there'll still be something similar to an annual return, but it'll just be a final declaration with adjustments. The big change is you're now required to use compatible software. The quarterly submissions will be on a rolling basis, and it's an attempt to get closer to real-time reporting, but it's not quite there, but it's close. The people it affects, it only affects sole traders and landlords. So if you're self-employed, trading in your own name as a sole trader or as a landlord, and your combined qualifying income, and it's only from those two streams, comes to over £50,000 in the tax year ending 24-25, which is 6th of April 2025, you need to be in the system at the moment and registering for Making Tax Digital and then planning to submit quarterly returns. If you didn't reach that threshold in the 24-25 tax year, but you did in the 25-26 one, you don't need to register at the moment, but you will need to next year. So the qualifying time frame is the 24-25 tax year. So there's what HMRC are kindly calling a soft landing to try and get people in, but then from April 2027 the thresholds then start to fall as well. Qualifying income shifts then to 30,000, and from 2028 to 20,000, which for a lot of people is barely over the minimum wage. So by 2028 we're expecting almost all sole traders and landlords to be submitting quarterly returns. If you're currently trading through a partnership or through a limited liability partnership or in partnership with somebody else, HMRC have not clarified the position there. So at the moment we're working on the assumption partnerships are out of scope for Making Tax Digital. They just haven't said, they've not set any deadlines. The legislation's not there to implement it anyway. So it seems unlikely that's coming in anytime soon, but we're hoping that will get clarified in the next 12 months. And if you've got joint income from a pay-as-you-earn job, if you're working for an employer, getting paid through pay-as-you-earn, and you've got an income as a sole trader, it is only the sole trader income that applies. So you can ignore anything you're getting, you're earning through pay-as-you-earn. The practical workings, though, unfortunately, is you have to keep digital records now, which means subscribing to or working with an accountant who subscribes to one of the main bookkeeping softwares. QuickBooks, Xero and Free Agent are the main ones. Sage is also compatible. There are some bridging softwares available for spreadsheets. If you do everything through spreadsheets, you won't be able to file a quarterly return, but there are some bridging softwares available. And the quarterly return itself will just be a summary of income and expenditure. It's not a full tax return. You're not expected to apply the quarterly return updates for exemptions or for reliefs or any kind of changes or adjustments. It's just a straightforward summary of your income and expenditure. And then at the final return, at the end of the tax year, that is the point at which you can then make claims for allowances, reliefs or exemptions. That final return, year-end adjustments, will replace the current tax return. But to all intents and purposes, I think most people are going to find it's pretty much the same amount of work. Deadlines running along the same system as the VAT system. So whilst the tax year itself runs from the 6th to the 5th of the month, and the pay-as-you-earn system also runs from the 6th to the 5th, the deadlines will be the 7th of the month following. So the first quarterly return, if you're in the system, will be the 7th of August, and the second one the 7th of November, etc. And then your final Q4 return will be the 7th of May, and then the balancing adjustment, the final year-end return, will be still be the 31st of January. And I think it's worth pointing out at this stage, this doesn't affect tax payments at all. It's simply a reporting mechanism. So your final tax amount due for payment is still the 31st of January, unless you're caught within the payment on account system, in which case it's 31st of January and 31st of July. But there's no expectation of paying quarterly at the moment. It may go there, but we've not seen that happen. And again, the legislation's not in place to make that happen. So from a cash flow point of view, no change at all. It's just an increase in work admin and bureaucracy. Compatible software. Most of the main bookkeeping software is compatible, and you can sign up and register for Making Tax Digital through it. The only caveat I would have around that is if you use Excel and bridging software, there's some available at the moment, but you do need to test it and make sure it's still compatible, because HMRC, bless them, are still changing the goalposts around compatibility and integration with their systems. So the main players will be fine, but there's a lot of smaller players out there which are coming into scope, and if you're not sure, HMRC have a list on their website of compatible software that they're confident will work with their systems at the moment, and that list tends to change. So keep an eye on that. If you're not sure, ask an accountant who should be able to tell you if the system's compatible. But the main things you need to keep is the same as if you're doing your normal tax return, income and expenditure by category. Keep receipts and invoices for everything. HMRC can request records going back up to 6 years after the deadline. And I would strongly recommend keeping a backup of everything somewhere safe, not in the system itself. Keep a separate backup outside of the system you're using. Bear with me a second. What I was going to suggest, Sam, that's the sort of quick overview of Making Tax Digital and how it's working. Would now be a good time to take questions on Making Tax Digital, and then we'll move on to expenses and deductions.
Yeah, does anybody, because I think then we can move and it keeps it quite separate, because I think they are quite separate things. So yeah, if anybody has any questions specifically on Making Tax Digital, if you can either pop it in the chat or raise your hand and ask.
Excellent.
Jane.
So I currently use software with my bank. I bank with Lloyds, and I use their finance assistant software. And they've been sending emails saying that by the end of this month, it will be Making Tax Digital friendly. It will, I'll be able to use it for that. As an accountant, have you heard of bank-specific software actually working in this way? Because what I don't want is to wait till the end of the month and then it's not actually working.
I've heard that. I must be honest, I haven't heard that from Lloyds. But if Lloyds have said that, it's almost certainly the case. So I wouldn't worry about it. If you bank with NatWest or Metal, Free Agent is compatible, and that comes free with your bank account. And then I sat through a presentation from Starling recently, who were launching a Making Tax Digital compatible software. I think they launched it last week. So if you bank with Starling, you should be able to get theirs. The one I'm not sure about is Tide. We have a lot of clients who use Tide, who use Tide's bookkeeping software. I've not seen that that's Making Tax Digital compliant, but the banks are all heading in that direction. It's just they're going to do it at different paces. But the master source is the HMRC list. So if you go to HMRC's website and look for compatible software, and we'll put a link in the presentation when we send it out, that list changes all the time. So if you're not sure, ask them. It's very unlikely Lloyds would have said that and not being in the position to deliver. So I'm reasonably confident with Lloyds.
Thank you.
Any other questions?
We've got Amanda.
Okay.
Hi, it's not a question, it's just a comment. I'm with Starling, and I actually signed up for it over the weekend and had a little play around with it, and it looks reasonably straightforward. So hopefully it will be okay. Having kept spreadsheets for 15 odd years, moving on to something like this is a little bit different. But I was obviously concerned. I didn't want to have to pay out for software that wasn't going to do what I didn't need it to. But the Starling platform looks decent. So fingers crossed it will be okay.
Yes, yeah. What Starling did was buy in an Australian bookkeeping firm and use their software, and that was a recognised piece of software before Starling bought it in-house, and it seems to work fine. I sat through a demo of it a couple of weeks ago, and it looks good. So Starling seem to know what they're doing, so that should be okay. Any other questions on Making Tax Digital?
I can't see anybody. But we can, maybe if we move on, and then if there are any others towards the end of the call, then we can come back to them.
Yeah, absolutely. Okay. So we said we'd run through the principles of tax deductible expenses, which is always an interesting topic. It's a moving target, just that the general principle that's in the legislation and has always been applicable for sole traders is that the item needs to be wholly and exclusively for the purposes of the trade, which means it must be 100% for the business. It can't have a private element, although there are rules and there are ways of apportioning where there's a private element. And that principle extends further. If you're an employee and you're not sure if you're trading through a company and you're on a payroll, the rule extends further to wholly, exclusively and necessarily. So it's a lighter test and it's slightly more relaxed for sole traders than it is for employees, where the spend has to be in the furtherance or performance of your duties as well. There's an interesting distinction between capital and revenue, which we could come on to if that's concerning anybody, but that's the overriding principle. And then what the courts have tried to do over the years is apply that principle to a whole range of different topics, depending on who's fighting about what with HMRC at the time. But I'll run through the main ones we tend to see and get questions about. The big one is working from home expenses. So HMRC have always had a flat rate method. So there's normally two methods with HMRC. One is a flat rate allowance, which you can claim in the case of working from home, £26 a month if you're normally working from home most of the time. Or if you want to claim the actual costs applicable to the item that you're claiming for, that's done on a pro rata basis. And HMRC came up with £26 a month because if you take the average house, the average working week, apportion the costs down to the floor space, multiply that by the time that you're working in it, you don't come, it's not usually far off. Flat rate expenses are simplified. There's no need to produce receipts or any evidence. You just apply for that amount through your tax return as a deduction. If you're going down the proportion route, you need to produce receipts and invoices and the calculations. And there is, certainly for the working from home allowance, there's a sensible calculator on HMRC's website you can use to try to get to those. And yeah, for large houses, the calculation get complicated, but it's not as straightforward as the flat rate method, which is easier. The thing that's changed recently is during COVID and for a few years afterwards, you could claim that even if you only spent one day of the year at home, you could claim the working from home allowance. They've tightened the rules again now, so it's back to just being the time that you actually spend sitting at your desk working from home. The sort of things that we tend to see as commonly deductible, equipment and technology is usually fine. If it's larger, if it's an amount that's, we tend to work to about £1,000 to treat something as a capital item. So a laptop over 1,000, we'd normally treat that as a balance sheet item, capitalise it, but then there's an annual investment allowance that you can use to write off 100% of that in the first year. And things like software, stationery, all fine. HMRC do tend to not take the view that you're using it 100% for business. So if you are not using 100% for business, it's best to put through a pro rata reduction in through your tax return. Travel and subsistence, public transport, travelling to a place of work isn't allowable, but travelling to see a client or travelling on work is fully allowable. Mileage is currently still 45 pence per mile. That's up for review at the moment. It's been 45 pence per mile for donkey's years, and the government's looking to change that, but I suspect that may go up with the increase in fuel costs, but that's not been announced yet. And then things like professional admin costs, so your insurance, bank charges, anything relevant to the work you're doing that's specific, or professional body memberships are all deductible. Marketing and advertising is for the business or of the business is deductible and absolutely fine. So things like website design, social media, anything you spend on materials. The thing that's not deductible is client entertaining. So if you take a client or contact out for dinner or for coffee, that item isn't deductible, and that applies across the board. There is a slight nuance to that. If you are entertaining clients and you're hiring a room in which to do it, you can deduct the room hire charge, but not food or drink. And then training directly relating to your current trade is absolutely fine. Training to learn something else isn't. It needs to relate to the work you're currently doing and you're getting paid for. One area which is complicated is clothing. There's a general principle: clothing is not tax deductible unless it's branded. Branded workwear, uniforms, if you're required or your employer requires you, or your business has branded workwear, that is deductible. But if it's not branded and it doesn't reflect your company logo, then generally it's not. This is just an example of how the simplified expenses plays out. If you're claiming for the car or van mileage rate at 45 pence per mile, it's worth bearing in mind that is quite generous. So until the last few weeks, petrol, diesel costs were running at around 7 to 9 pence per mile. If you add onto that an allowance for wear and tear, depreciation, insurance, car tax, that sort of thing, you still struggle to get up to 45 pence per mile. So it is quite a generous allowance. But if you're claiming the flat rate allowance, you can't then claim the cost of purchasing the car and a reduction for that at the same time. Working from home allowance is now prorated, as I mentioned, and goods for private use I don't think would apply a great deal in this scenario, but there are usually, for most categories, there's a simplified way of doing it, or there's an actual prorated cost way of doing it. So there's just a worked example for a tutor, the numbers for illustration only, but if you're buying a laptop for work and using it almost entirely for business, the easiest thing to do is claim most of that. The home office allowance tends to work out at £312 a year. Broadband, HMRC tend to accept these days that broadband mobile phone costs are almost entirely business related, and that we don't have to prorata line phone calls out anymore. In the old days, we used to have to prorata out phone calls and deduct the private ones, which took hours. Mileage to and from clients is fine, CPD and insurance. So that's how the system is designed to work. The good practice points worth bearing in mind: always keep the receipts, take a photo of anything as soon as you get it. There's receipt scanning apps. We can recommend receipt scanning apps we use, and most of the main bookkeeping systems have a receipt scanning app built in as well. Keep contemporaneous records. I strongly recommend keeping a separate business bank account from a personal one. We're working with people at the moment that haven't done that, and it does take some time to separate out. It's probably a good idea to reconcile your accounts and do your books on a regular basis anyway. The trick with bookkeeping is a little and often is a lot easier than once a year at the year end. If you're driving, keep a mileage log. There's plenty of apps that can do that. And again, the bookkeeping systems all have mileage logs built into their apps now. You need to keep your records for 6 years. So roughly, if you're filing on the 31st of January, right at the deadline, keep everything for at least another 5 years. And then we are going to have to use compatible software. The things that HMRC investigate and tend to launch inquiries on is personal expenses being treated as business. If you're on the wrong end of a HMRC inquiry, they will expect you to produce a receipt for everything. Nobody can, so nobody expects that everybody keeps 100% of all their paperwork, but HMRC will if they launch an inquiry. And they do ask questions. We've had clients recently on the receiving end of inquiries where HMRC have challenged what we regard as perfectly legitimate business expenses. And that, again, it takes up time. It's just easier to keep the receipts than it is to argue about it. So subsistence, if you're claiming for yourself or your team to go out for dinner as a team event, that is tax deductible. But if you've got a client there, it's not. We talked about uniforms. I can talk about capital expenditure a bit more, but in this sector, it tends to mainly relate to IT equipment, which can, as I said, can be written off in full in the first year anyway. And then the Making Tax Digital penalty regime, again, is going to be a soft landing. So if HMRC have said they won't issue penalties for late filing of the first 4 quarterly returns. So for the 26-27 tax year, we're not expecting any late filing to result in penalty points, and those penalty points do transfer into cash. And it looks as though the cash cost will be £200 per penalty point for late filing. So it's going to, if you don't have a system for tracking your deadlines, I'd strongly recommend doing one. And the sort of resources, the next step is the HMRC website is very good. The government guidance on making tax digital is quite good. There are guidelines within the HMRC website for sole traders and for simplified expenses. It's a long read, but there's a business income manual, which is the guidance to HMRC inspectors, and I can talk about capital allowance if that would help. Questions? So it's a bit of a whistle-stop tour of the subject, and a lot of these areas do get litigated on. So HMRC do pick fights with people. So we've had quite a fight recently with the tax inspector over whether someone's dental work. This is a lady who was started appearing online in the States, and in the States you need to have high quality teeth. So, and in the UK there's a whole raft of cases from the days when radio actors started becoming TV actors, where the court said you need to do that for work, it's legitimate cost, it's allowable. HMRC have started challenging that one now. The things that we tend to not put through our clients' books because HMRC will reverse it anyway is gym equipment at home, counselling. So we've got a lot of clients trying to claim therapy and counselling. That's HMRC would see that as a personal benefit, not a business one. Those are the main sort of contentious ones at the moment, but you can never really tell what HMRC policy are going to pick fights on. The way they work as well is they tend to pick sectors, so they'll pick a theme. So as we're going into COVID, for reasons unknown, HMRC sent an inquiry notice to every tennis coach in the country and just said, "We want to see your books," all of them. And then more recently, they've been going through the online influencer world. So if you've got a high profile on Instagram or TikTok, you've probably had a letter from HMRC recently asking them to see your books, and they just pick a tax year and say, "We want to see everything that's gone through in that year." And it's just blooming hard work if they do that, because it's time consuming for everybody involved. Okay. And apparently so I'm just trying to read, sorry, the question came and went. Was the question, I don't keep invoices or receipts, I just record in Excel? Sorry, Sam, you're muted.
Sorry, I have never done any invoices and just record in Excel when I do lessons and get paid. Do I now need to do invoicing and keep records of individual lessons and payments in accounting software?
Yes. If you're caught by the Making Tax Digital rules, yes, you do. Yeah.
Oh dear. Okay.
So the question is flagged up as, if HMRC do ask to see your books, what's involved? They will ask to see your accounts. If you're keeping accounting software, exports from there, your bank statements, your invoices and receipts. On the expenditure side, sales invoices, I appreciate in this sector, a lot of people don't send sales invoices because a lot of parents don't ask for them, but you are going to need to evidence that you've delivered a sale if you're claiming that as income. In the same way, you need to provide a receipt or invoice for an item of expenditure if you're claiming it as a deductible item. And then an HMRC inspector will look at all the invoices and receipts, scratch his head and think about which ones he doesn't like, and send you a lengthy list of questions saying, "I'm not sure about this one." What I'm hoping is that HMRC don't pick tuition as a theme. There's no sign of them doing it at the moment, and they seem very busy with Instagram and TikTok influencers. And they'll be having a field day in that world, because most people there won't keep any records at all. But writing it down on Excel isn't good enough. It's not evidence. If you've got a transaction going through a bank statement or a credit card statement, HMRC, if it's clear what it is, will often accept that as evidence that the transaction took place. But the best thing to do is issue invoices and keep the receipts.
So if the parents don't ask for the invoices, do we just keep them in our software, an invoice generated for each lesson?
Yes, that's absolutely fine. HMRC are absolutely fine with digital records. There's no requirement to keep anything on paper. Just issue it out of the software. And if your clients aren't interested, you don't even need to send it to them, but you do need to generate something that's evidence of the transaction.
All right. Okay. Thank you.
Sorry, Emily, I saw your question flash up and then it disappeared. Did you get that one, sir?
Yep, I have self-employed work both through my own business, which I invoice per lesson, but also I work self-employed through a tuition company where I can't invoice. What could I do here?
Well, if you're working for a tuition company, they should be paying you and providing you with some documentation to support your income on the income side. And the same rules still apply on your expenditure side. If you're incurring costs in running your business, whether it's delivering through somebody else or working in your own name, you still need to keep the receipts and invoices for expenditure.
Amber has said, what about if we get paid from a platform, i.e. Spires or Tutorful? I know they are also sending information to HMRC as well, but we wouldn't do invoices for those usually. This might be the same question you just answered. Personally, I think that generally they would provide, again, some sort of documentation. There must be something in the platform that you can download that shows there would be a record of what they have paid you, and then you just need to add it your side, I would assume.
Yes, yeah, they will provide you with statements. They may not provide you with, theoretically, if they were standalone, you'd be providing them with an invoice for each transaction that you carry out and they pay you for. But if they're running a self-billing system, which Tutorful and most of them do, and most of the big online platforms run a self-billing system. So if you're working as a freelancer through an agency and you're just completing a timesheet, they should provide you with a self-billing invoice and also with a statement to show how much they've made. And then we've got clients working through some platforms which where the client is VAT registered, where the platform is now paying the VAT over to HMRC for them. And in order to get the VAT back, you have to then submit your VAT return to the platform as well. That's only happening really in the content creator world, but it's coming. HMRC have got the back end of all of the online platforms, and they've got all the customer data, so they see everything. But it's the responsibility. I would say the responsibility is on the platform then to provide you with the documentation.
I've also just asked John separately, sorry, and he said, I think this is more in relation to Emily's question, but whether the tuition company pays you via some automated means and doesn't need the invoice, it doesn't matter. You can just make an invoice and send it to the tuition company as well.
Yeah.
So just with your hours and however much you've done, so that they have the record from you too.
Yeah.
And then we have, sorry, it just says L. Melland. Hi, Stephen, can you explain how we should proportion business use of broadband? The room method doesn't seem to make sense given that empty rooms don't use broadband. Most of our broadband use is for business, but the study is a small proportion of the house. Thanks, Louis.
If the broadband is primarily used for business, I mean, in some of those cases, there isn't a right answer. There isn't the scientific way of calculating it. So a good guess will be fine. If you said your broadband was 90 to 95% business use or 5 to 10% personal and put in a pro rata figure, HMRC are not going to argue about that. They're more interested in, because they're assuming that in order to run a business from home, you must have broadband and you will have the heating on. But I would say in those cases, it's almost impossible to get to a scientifically correct figure. The one way you can calculate it is utilities. And because you know what your bills are every year, you can work out the floor space of the room and the time you spend in it. So you can pro-rata that down. But that's why they introduced the simplified working from home allowance, just because by and large people end up around the same figure anyway. So it's just easier to claim the flat rate allowance than it is to do the calculations. But if you do the calculations, you do need to keep the invoices and provide the receipts.
We then have Laura, who has asked, I have an accountant. Would I still need accounting software? I understand these can be quite expensive. Accountants get a discount, a wholesale discount from the software providers. That varies enormously as to how much, what the discount is. There are free, as I said, there are free software out there. So if you bank with NatWest or Metal, Free Agent is free with that account. Starling have introduced a free one. It sounds like Lloyds are as well. And Tide have, but I haven't heard that Tides is MTD compatible, so I can't recommend that at the moment. Normally your accountant would be able to buy software on your behalf
apply a discount to it, so it's cheaper for you. Than it depends whether you want your accountant to keep the data or and custody of the system, or if you want to have control of it yourself. I mean, 99% of our clients just leave that with us to deal with for them, but you do have to pay for it, yes. And one of the issues with accountancy software in the last couple of years is their increases have been significantly above inflation, particularly Zero. Zero used to be reasonably good value for money. It's now very expensive, in my opinion. And the one that's ludicrously expensive for what it is Sage. QuickBooks is still, in my view, pretty good value for money. And there's a lot of other smaller players now coming into the market. So it's a moving target. But there is also, with software, there's a cost to change. It takes time to move systems if you need to.
I think as well, quite a few banks are now giving you accounting software for free. So for example, I think Monzo Business is giving you access to free accounting software just to help with all of this. So it might, if you're looking at moving, it might be looking at moving more than just accounting software and moving banks as well, and then having a look at all of the packages. But yeah, okay. Amber has said, you can download a CSV on Tutorful for a set date. Spires don't offer this. I've reached out to Rosie as well from Spires. So if I hear back from her, I will let you know, Amber, if there is something or how to get that as well. Jennifer has asked, this is going to be my first year doing my tax return. When I have been documenting my income, I have written what the parent has paid minus the fees from Stripe. Should I have recorded them separately?
No, the Stripe fees are a deductible expense, along in the same way that bank charges or PayPal fees would be a deductible expense.
And Beth then asks, what are the pros and cons of using bridging software instead of synced MTD software like Xero?
It's mainly not knowing who the provider is. So there's bridging software. That one of the risks with making tax digital will be a significant increase in fraudulent activity and people trying to take advantage of the system to sell software that doesn't quite do the job. One of the easiest ways of doing that is to say you've got an Excel bridging tool which is MTD compatible. I would check that it's on the HMRC compatible software list before using it. If you're not sure, ask an accountant if they've come across it before. They will almost certainly recommend you use one of the better systems, more established software providers. So the bridging software comes and goes, and I've used bridging software for VAT in the past, which worked fine, but I knew the provider. So that's the real risk is just that you don't end up spending money on something that isn't actually approved and doesn't do the job. The other issue with bridging software is that there's often no backup support behind it. But with QuickBooks or Xero, one of the bigger providers, there's a help desk and support, and usually community you can talk to as well.
I think also just to add, having been on the kind of like other side of having HMRC asking questions, I would just say do it properly, and it's not worth the money that you think that you're going to save. This is here to stay, so we may as well just get it right the first time and then have all of the records. Because as soon as they're asking questions and you need to provide all of the documentation, that is days of work that is just not worth it, if you can save the time.
No.
I've also just heard back from Rosie as well, and she said that tutors can export their class history, and this shows all platform earnings too.
Okay.
So that should cover that as well, Amber. Jane says, currently with Lloyd's Business Finance Assistant, your accountant can gain access to do your books. And Amber has said Xero is free for 6 months with Monzo Business. Okay, Amanda asks, can you clarify what counts as subsistence, i.e. buying food and drink when working away from home? I also do other work as well as tutoring and believe I can claim subsistence for this. What about if I'm out and about all day tutoring?
Generally, if you're out and about, you're not at home, then normal meals are classed as subsistence. It's treated as a travelling expense, and you can claim that as a tax deductible item. And there isn't any flat rate guidance on this. There isn't any specific rules. I have had a HMRC inspector challenged whether somebody's evening meal they claimed was extortionate or not, and they'd been in Wagamamas. So I said, well, realistically, there's no prescription. HMRC doesn't have a figure in mind to start with, and that's a commercial decision, not a tax one. So no, if you're eating out in the Ivy every night, they're going to notice. But if you're out and about travelling and you stop for dinner somewhere, that's perfectly fine. As is breakfast and lunch, as long as it's not a normal pattern of behaviour and it's not seen as ludicrously excessive. But again, where HMRC are going is they're trying to get involved in those sort of things as a commercial decision, which isn't their remit at all. So if we come across that, we just push back and say that's not for you to say. Just don't involve clients and don't claim for anything which could be seen to be a client entertaining item. The same applies to your team. So if you've got people working for you and out and about, that's fine. That's travelling expenses, so that's good.
Amy asks, I am completely new to all of this, not officially trading until next Wednesday. So in terms of the quarterly returns, am I right to assume that I won't submit these until the next tax year?
If you weren't working as a sole trader during the 24-25 tax year, you're not currently required to register for Making Tax Digital. I would recommend starting off as you mean to go on with, as Sam said, get the systems in place and keep records and keep receipts. But no, you're not required to register at the moment. You may get, if the business does well, you may get caught up next year. So.
Great. Okay, that's all the questions in the chat. Does anybody else have any other questions? Perfect.
Okay.
Does
Thank
anybody else have anything that they'd like to ask Stephen while we have him? Or you're all very happy?
Anything at all. Everybody's tax and accounting affairs up to date and working well. It's good.
Brilliant. In that case, thank you so much, Stephen, for your time this morning. Thank you, everybody,
for attending.
For everybody that's been here for the full session, I will send out the link to get your certificate within the next couple of days. But otherwise, have a great day. Thank you, everybody.
Thanks, Al. Thank you.
Thanks, Stephen.